All right, what about our forecast in these product categories? I want to talk to you about what I said in 2015, how that worked out, and then my forecast for 2016. In the office and industrial markets for 2015, we knew it would be one of the biggest construction years since 2004, strong absorption and healthy vacancy. We were correct here, although construction completions were not as great as 2004. But absorption was at its highest level since 2009, and vacancy in this market dropped to a 20-year low. 2016 in the office and industrial leasing and development category, another big construction year. There's 2.5 million square feet underway now. Vacancy remains stable because we're going to get some absorption to keep up with the new construction, and rental rates are going to continue on their upward trend. How about in the retail markets for 2015? Another healthy year, positive absorption in every market. Now, I was close here. There were actually a few submarkets in the retail sector that actually had negative absorption, just a very little, but we had overall very high absorption overall in the market. Vacancy, actually, as I just mentioned, went down to 3%. So in the retail markets for 2016, expect construction to exceed what we did in 2015. There's already 850,000 square feet underway. We're seeing some big box locations being reintroduced to the market, but there's also some outdated product type and in inferior locations that are going to continue to suffer. We're going to get continued positive absorption in the retail sector. You combine that with consumer spending numbers that are positive, the retail market is healthy and vacancy remains at 3%. All right, the multifamily market, the apartment market. So what did I say for 2015? We were going to have positive job growth, positive population growth, but the demand was not going to keep up with vacancy, and vacancy was going to go to double digits. I mean, this is the good kind of wrong here. We had a historical positive absorption in the apartment market, and accordingly, vacancy, as I said, went down. As we go into 2016 in the apartment market, we see, again, positive job and population growth. But as I mentioned, 7,200 units proposed. And I just think it's going to be tough to have two back-to-back historical absorption years, and accordingly, vacancy's got to go up just a little bit to 8%. In the single-family homes market for 2015, what did I say there? You expect new homes to increase and expect values to reach its highest level since 2007. That indeed happened, a 10% increase, and with home starts and home sales are at the highest level in the last 8 years. For 2016, in the single-family market, another 10% increase in new construction, similar sales volume as in 2015. I mentioned last year there's a couple of areas where there's some shortage of land because there's just such high demand there. And inventories will be at an all-time low level. All right, what about our prospects for investing and our outlook for land? Moss Withers is going to tell you all about it.
It's been another incredible year for land in the Triangle area. No matter the category, values have increased. If the one word to describe land this year would be urbanism. Last year, I described values in downtown Raleigh reaching upwards of $100 a foot or $5 million an acre. This year, that value is $140 a foot, with a couple of examples reaching $150 a foot. Two of those are the News and Observer site, which is a leaseback, and the existing Enterprise rental car site, which is a new hotel development. With prices rising, the new tactic for negotiations is timing. For buyers looking to acquire the ideal site, they need to be willing to cut their due diligence to 60 or even 30 days with a 30-day close. Shorter time frames mean higher risk for the buyers, but there are buyers out there willing to take that risk to acquire the right site. Suburban areas such as Western Wake County, Briar Creek, and Wake Forest have seen a slowdown in land transaction volume. And that's due to two things. One, there's just not a lot of good inventory out there. It's either being developed or already been developed. Number two is increased political pressure. Higher development regulations have caused developers to spend more time and money to get sites approved. This means sellers need to be patient. Retail land is hot as well, with tenants such as Aldi, Sprouts, Publix, Harris Teeter's looking again, and Wegmans looking to open 3 sites around the Triangle in 2017. If you have an undeveloped or an underdeveloped retail corner, you've got a great opportunity. Do understand these tenants will not sign a lease without entitlements, so sellers do need to be patient. For investors, I would be looking in markets such as Franklin County, Lee County, and Johnston County. All 3 have great infrastructure and are primed for new development.
Thank you, Moss. How about our investor outlook for income property? Much of the same, there's still a lot of liquidity in the market now. As money continues to flow into commercial real estate, we had a 25% increase this past year. We expect the same for 2016. Now, the second-tier markets like Raleigh, the buzzword is 18-hour markets compared to 24-hour markets like New York and Los Angeles. We're going to continue to see a lot of investment in the 18-hour markets like we are here because investors just can't get in those 24-hour markets. It's very competitive, and they're not getting the returns that they want. Multifamily and warehouse, as I said earlier, they are the shining stars. Office is always popular. It's just hard to find that. The minimal uptick in interest rates, we don't think it's really going to have that much effect, at least in 2016, if it's a minimal uptick. The apartment market, as I said, I think it's got to cool a little bit. There's got to be some supply side pressures, and we're starting to see some challenging from the lenders. Developers that are willing to do some ground up development, there's a lot of opportunities there. I want to thank you again for your time, and I look forward to seeing you up at the concourse in just a little bit. Thank you.